Good evening and welcome to the first edition of Capital Market for 2026, live on Channels Television, where the market speaks and we analyze. I'm Ladi Williams. Well, 2025 was a great year, for stocks, metals, fixed income market in some markets. We're trying to find out what 2026, has in store. Now let's look at the first trading day for major markets that we track in 2026. And we see most of the markets in Europe, they closed in the green yesterday. Britain's FTSE 100 index briefly, surpassed the symbolic 10,000 points marker for the first time, extending gains after a bumper 2025. Then we see the likes of the DAX there, 24,539 points, closing 0.20% up. That's for the first trading day of 2026. Now the CAC 40 in France, on the flip side, that dipped 0.56%, 8,195 points. Take it on to Asia now. We see South Korea's Kospi hit a new record on Friday as Asia Pacific markets, kicked off the new year, but was trading mostly mixed there. 0.37% down for the Nikkei. The Shanghai Composite, marginal rise there. That's why we see that mixed sentiment. The Hang Seng Index, that closed 2.76%, up at 26,338 points. Now we see heavyweights like Samsung Electronics, that was up about 7% higher. After the company reported and reportedly claimed that customers praise its high memory bandwidth or HBM chips. Then we see the small cap Kosdaq was 2.17% higher, closing at 945.57 points. Some Asian markets were still closed for the holidays, including Japan and mainland China. Well, let's take it on to the U.S. now. We see U.S. stocks had a mixed start to 2026 with the S&P 500 there, ending up 0.19%. But the tech-heavy NASDAQ, even though we had, towards the tail end of 2025, we saw the AI sell-offs there, but that seems to be, sipping into 2026. So it's just 0.03%, a marginal drop there. Then we see the Dow Jones Industrial Average, a more convincing rise to close there for the first trading day. 0.66%. Then, the modest rise, marked a turnaround from, recent years as the S&P 500 had fallen on the first trading day in each of the past 3 years, underscoring the lack of a consistent New Year trading pattern. So that's the picture right there in the U.S. Then bringing it back down to, Nigeria, we see the stocks here also kicking off, in the green. The NESD Securities Exchange closed the week higher as the index is up about 0.37%. Market cap, that's to the 2.13 trillion naira. Trading activity was negative though. Volume was down about 28 points there. Value was 772% higher. And the total deals, that was down, closing at 23 trades, down about 67.61%. On price performance, Golden Capital PLC, IPWA PLC, Geofluids PLC, those were the gainers. Losers were led by Industrial and General Insurance PLC, which fell about 1.56% to about 63 kobo. On the activity chart, the most traded securities for the week, that was Central Securities Clearance System PLC, Geofluids PLC, and Industrial and General Insurance PLC. That was a picture right there for the unlisted stocks. And we'll take it on to the equities market now. The Nigerian exchange closed the week higher with the All-Share Index rising 1.92% to 156,492 points. Lifting market capitalization to 99.9 trillion. If you approximate that, you're about 100 trillion, at this point. Then, we see even the first trading day of 2026, closing in the green. If we move over now to other parts of the market, we look at trading activity. That was also, looking good for the week. We also see, the gainers there. We see the banks were on fire for the last trading day, right there in the first trading day, actually. So you see there, Austin Labs Company PLC, 45.94%, for the week. A big close there. Nice double-digit gains for most of the winning stocks there for the week. All right, now we're going to do a throwback, into 2025. We'll analyze the outgoing year and get an outlook for what to expect in 2026. Well, join us for this conversation. We have Professor Uwaleke, is a director, Institute of Capital Market Studies, Nasarawa State University, Kefi, and is also the president, Capital Markets Academics of Nigeria. Great to have you on the show, sir. Happy New Year.
Yeah, Happy New Year, Ladi. It's indeed my pleasure. Let me quickly remind you that I was your first guest in 2025, and
wow,
I am also very excited to be your first guest on this edition of Capital Markets.
Fantastic. I'm actually I will go and watch that 2025 edition, so we'll see how your crystal ball, played out for most of 2025. But thank you again for being our first guest on Capital Market for 2026. So, definitely looking at, what played out in the market there in 2025 was a stellar performance there, looking at the all-share index up over 50%. We had some stocks giving gains of, the likes of NRC, getting about 1,300% in gains. That's, starting off the year and ending the year, 2025. We also had some stocks giving up to 400% in gains. So paint a picture for me. Looking at some of these performers now, did you see this coming? Did you see the market delivering over 50%? That's the all-share index.
Yes, you used the right word, stellar performance for 2025. The markets really finished up, quite strong at over 51%. As a matter of fact, 51.19%. Now, if you compare that with the returns we also witnessed across African markets, it came in at number 2, next to Ghana. The Ghana Securities Exchange, recorded 79%. So Nigeria is second, followed by Kenya. Nairobi Securities Exchange at also around 50%. And then you have Egypt at 40, and then the top 5, South Africa came in at 37. So overall, the Nigerian, stock market, actually performed, well. And that's on the back of if you like, the macroeconomic stability that we witnessed in 2025. Of course, you can't divorce the performance of the market from that of the overall economy. We saw GDP growth, for example, coming the latest at 3.98% for Q3 of 2025. Before then, of course, you remember, in Q2, GDP had even grown to 4.23%. We also witnessed significant moderation in inflation rate, dropping to as low as 14.45% in November of 2025. And more importantly, we also witnessed stability, a lot of stability in the forex market as a result of a number of measures the central bank took in 2025. So all this rubbed off positively on the performance of the companies in our stock market, such that you now find companies like Better Glass, the industrial sector, posting as much as 470% gain. You have also other companies that are particularly in the consumer goods sector. As a matter of fact, the consumer goods sector, emerged the best, in terms of sectoral performance, posting as much as 129%, gain. Remember, I just told you the all-share index, did 51%. So it means that you have a sector that is outperforming the market, by far, the consumer goods sector, where you have the likes of, Guinness. I think Guinness put in over 300% gain. You also have the likes of Champion Breweries at over 200%. And other companies too in that sector did well. Nestle, for example, Nestle is close to 2,000 naira now, per share. Nestle, Unilever, these companies actually did well in 2025. Again, as I said, on the back of earnings recovery. Remember, a number of them posted huge losses in 2024 as a result of the exchange rate unification, that effectively devalued the naira. So the devaluation we had 2023, 2024 impacted these companies, and they recovered in 2025. So these companies, consumer goods, as I said, did quite well, followed by the insurance sector. The insurance index also outperformed the market at over 65%. And that's for insurance sector. The likes of IECO, the likes of sovereign trust. Sovereign trust did over 200% return. But of course, these stocks, it's easy to get 100% gain, for example, a return from a penny stock, a stock that is, has very low price, than getting it from a very high stock. For example, sovereign trust and ICO are in the region of 3 naira 90 or less than 4 naira. Okay, so it's easier to move from 1 naira to 2 naira, 100%, than doing that for a stock like Seplat. Okay, Seplat is about 5,000 naira per share. So it's not easy to have that kind of movement in stocks like high valued stocks. So insurance sector, no doubt, did well as a result of, repricing, if you like, or rating that happened in 2025. We also had, yes, industrial goods came up, I think 58%. That's another sector too that outperformed the market. That's where you have the likes of the better, glass that's put in over 400%. So consumer goods sector, insurance sector, industrial goods sector, they all did well. And
all right,
you can't also, not talk about the banking sector. The banking sector equally performed, although under the market, 39%, despite the headwinds that the banking sector faced.
All right, Prof. Yeah, before, as you were speaking there, we saw the laggards, the list there, the worst performers in 2025. When we see VFD Group, that was topping that counter. If you can put that up, if you see VFD Group, that was down about 70%, for the year. We also see, some other laggards on that list. So, looking at those stocks, how do you think investors should, interact with those stocks, coming into a year like 2026?
Yeah, the best approach is to, again, rely on the fundamentals of the stock. It is the fundamentals that should guide your choice of investors' preference for stocks. So if the fundamentals are good or they are promising, of course, what it means is that the low valuation we're having now is a case of mispricing. It also means that there's opportunity for the stock to pick up. Most of the laggards, we saw actually in the oil and gas. Yes, I can see you have just put them up. The likes of Oando, Conal, Total Energies. Of course, the oil sector in general, I think, went down by as much as 1.54%. The oil sector, and that's not surprising, given the headwinds we saw again in that sector in 2025, particularly the uncertainties around oil price, the fact that that sector is still dealing with the issues to do with theft, oil theft, pipeline vandalism, particularly those operating in the upstream upstream sector. So as I said, what to watch out for, majorly in terms of company specifics, are the fundamentals. Of course, the industry, what's happening in the industry too is something to watch out for, apart from the entire macro economic environment. So in deciding whether or not to invest in any stock, fundamental analysis requires that you do macroeconomic analysis. You now drill down to the industry or sector analysis, and of course the company, try to also look at what's happening at the level of the company, both in terms of quantitative and also qualitative factors.
All right, definitely a lot to unpack there, Prof. But we'll take a quick break now. But when we come back, we'll analyze, what some billionaires did, at the tail end of 2025. That's next. Just stay with us. Welcome back. Well, we still have Professor Uwaleke here. We've been taking stock of what played out in 2025 in Nigeria's capital market, and now we're getting an outlook, into 2026. But before we get into, what's played out, or what to expect, in 2026, Professor, we've seen billionaires making moves already. That's in the tail end of 2025. We saw the likes of Mr. Femi Otedola selling a huge stake of his in Geregu Power. We also saw Mr. Tony Olumelu also, purchasing a huge stake in Seplat Energy. So, definitely we have, some retail investors that like to follow what the billionaires are doing. Looking at these two deals, what would you say it's cooking, at this point?
Well, for me, it's the signaling property of the moves, by the two of them. I think what it goes to show is that our energy first, our local investors, have come of age, if you like. So we are not, as a country, we are no longer going to be relying solely on foreign investors, to help develop our country. So that's one, for me, that's one, significance. The other thing is also to note that it also means that the energy sector is now being recognized as one sector that can create value. Look at the case of, let me even take the case of Otedola, for example. You see him divesting, selling, I think Geregu, his interest in Geregu Power, to MAM Energy, Energy Limited. So, and for me, the important thing is that it was not a distressed sale. Okay, that's why I talked about, energy assets, having, value. It wasn't a distressed sale; it was voluntary, and that's rare in the power sector. So, that's also what investors are looking out for. So it's also a way of boosting confidence, as I said, in our energy assets. If you turn to Tony Olumelu, his company has also been operating in that sector. Hers operates, as you know, OML 17 at meaningful production level. Between 2021 and now, we understand OML 17, does up to 50,000 barrels of oil per day, and up to 100 million standard cubic feet of gas. Okay, so for that kind of person, that kind of company to now add 20% stake in Seplat, again, Seplat oil, Seplat also operates in the upstream sector, listed not only on the Nigerian exchange, but also on the London stock exchange. Now, that company too does up to 50,000 barrels. So 20% stake is around 10,000. So adding 10,000 barrels to what he already has, I think again shows, for me, it's about confidence, in that sector. And as I mentioned earlier on, these are also the things that investors are looking out for, particularly institutional investors, pension funds, insurance companies. They want to see that our investors here, these companies, we are beginning to be good at quantifying risks and communicating the values of this company. So for me, it boils down to confidence. So it's a plus for the capital markets. Local investors have come of age. That's what the signal is saying.
All right, definitely we love confidence at this point. But looking at 2026, we've been seeing different forecasts, flying around. We've seen the Central Bank of Nigeria also release a forecast, for GDP growth, 4%, at this point. We're also seeing, forecasts for inflation. I'd like to get your forecast, what you're seeing coming in 2026. If you look at 2025, I did do an analysis of the MPR rates and, the trajectory for inflation, and we saw that, the MPR was quite steady until we had that 50 basis point cut during the one of the meetings from the MPC. So what are you seeing, for 2026?
Okay, yes, first beginning with the projections by the central bank. Central bank is projecting GDP growth rate of 4.49% for 2026. Also projecting that inflation rate will moderate to 12.9% in 2026. Of course, they're also saying that reserves will get shoot above $50 billion, and that will also help provide a lot of stability in the forex market. So the macroeconomic stability we experienced in 2025, yes, one expects that should continue, and the macro environment should also improve better. But a lot will also depend on what happens in the oil sector, in the external sector. Our budget has been based on $64.8 per barrel. So if oil price, stays around that, of course, the shocks to the economy may not be much. But if it drops, that will also mean you're going to have larger budget deficits. 2026 deficits were provided for 24 trillion naira budget deficits. That's 4.28 in terms of fiscal deficit to GDP, 4.28%. So if we miss that oil revenue projection, whether in terms of the oil price or even in terms of the oil production, remember oil production in the 2026 budget is 1.8. So if we miss that, that will also put a lot of fiscal pressure. That will mean the government will have to borrow more, fiscal deficit will widen, and the more government borrows, interest rates are driven up. And the more interest rates are driven up, central bank will come back to begin to tighten, tighten, because that may also fuel inflation. And the impact of that on the markets, once you see interest rates going up, what happens? Yields in the fixed income space begin to go up, and the portfolio investors begin to rebalance in favor of fixed income. So the equities market will now suffer. So by and large, I want to see 2026 to be 1 year where the market, yes, will continue on this positive trajectory on the momentum, right on the momentum of 2025. But one thing is likely to happen. We may not have the kind of returns we recorded in 2025 and 2026, and that is also going to be partly on account of the base effect. Returns, when you're calculating returns, you're calculating a return based on a base. So now we're going to be calculating the 2026 return based on the 156,000 index that we are having as at 1st of January. You just showed it there. The all-share index, rose to 156. So that will be the base on which you are calculating the returns for 2026. So the base effect may really, moderate the kind of returns we are going to have record in the market in 2026. But overall, I also see the market, returning, something positive on account of this, factors that I mentioned. Then there is also, of course, the issue of, apart from the macro things I mentioned, you also have what the regulators are doing. The SEC has an agenda, for example, that is, they've just released the agenda for 2026 that is aimed to also promote, a number of issuers, coming to the market. So I see a market that will grow next year, not necessarily as a result of price appreciation, but also, also coming from the point where you have market, the market being deepened further, because you have a number of issuers coming. Remember too that we are expecting Dangote refinery to be listed. So once Dangote gets listed, and we also have maybe a number of state-owned enterprises being listed, that will really, boost, the capital, the market, generally.
All right. I guess so many catalysts to look out for in this trading year, but definitely I do hope investors, make the best of it at this point. Thank you so much. It was great having you. For the first one in 2026, Professor Uwaleke, Director, Institute of Capital Market Studies, Nasarawa State University, KEFI, and President, Capital Market Academics of Nigeria. Thank you so much, sir, and Happy New Year again.
Thank you so much, Ladi, for inviting me. Thank you.
All right, so that's the show today. Thank you so much for watching the first one in 2026, and definitely I hope it's going to be a profitable year and maybe even bigger than your profits made in 2025. I'm Ladi Williams from here, the team right here at Channels HQ. It's bye for now.